welcome to the press briefing for the 114th Monetary Policy Committee meetings, which took place last week. The committee deliberated on recent global and domestic macroeconomic developments, assessed the performance of the economy, and the risks to the outlook for inflation. A summary of the assessments and key considerations that informed the committee's decision on the positioning of the monetary policy rate is as follows. Global economic conditions have weakened since the last MPC meeting in July 2023. Recent incoming data show some loss in momentum in the manufacturing and services sectors on the back of lower export demand and tighter financing conditions. Also, the sharp rebound in China's recovery during the first quarter has recently moderated due to slower consumer spending, following a renewed decline in the housing sector as well as a sharp decline in exports, reflecting weaker external demand. The IMF has revised global growth to slow down from 3.5% in 2022 to 3% in both 2023 and 2024. For emerging market and developing economies, growth is projected to be broadly stable at 4% in 2023 and 4.1% in 2024. Global headline inflation is projected to fall from 8.7% in 2022 to 6.8% in 2023 and 5.2% in 2024. However, the recent increase in crude oil prices exerted some upward pressures on headline inflation in some advanced economies, although core inflation steadily declined despite robust labor markets and pass-through of past cost shocks. In most EMDEs, headline inflation also increased, driven by the pickup in oil prices and renewed currency pressures. Long-term inflation expectations, however, remain anchored, especially in advanced economies, reflecting the continued tightening policy posture of central banks and the recent declines in headline and core inflation. Global financing conditions remain tight due to rising interest rates, stronger US dollar, and risk aversion for emerging market economies' assets. The prevailing high interest rates due to past policy rate hikes are still transmitting to financing costs. Also, the stronger US dollar in recent months amid higher treasury yields and increased demand has triggered renewed currency pressures, especially in emerging market and developing economies. On the domestic scene, economic growth was relatively strong in the first half of 2023. The latest data released by the Ghana Statistical Service show real GDP growth at 3.2% in the second quarter of 2023, marginally down from 3.3% in the first quarter, and compared with 3.5% in the same period of 2022. The observed growth outturn was largely driven by the services and agriculture sectors, which grew by 6.3% and 6% respectively. However, industry contracted by 1.9%. Trends in the bank's high-frequency real sector indicators also pointed to a sustained turnaround in economic activity. The updated Real Composite Index of Economic Activity contracted at a slower pace by 2.8% year-on-year in July 2023 indicating a slight improvement from a contraction of 3.1% in June 2023 and 3.7% in May 2023. The main indicators that contributed to the slight recovery in the index during the period were industrial consumption of electricity, private sector contributions to social security, and tourist arrivals. Credit to the private sector, cement sales and port activity, however, slowed down over the period. Consumer and business sentiments were mixed, as indicated by the results from the bank's latest confidence surveys conducted in August 2023. While the Business Confidence Index reflected the achievement of short-term company targets with positive sentiments about industry prospects due to improving consumer demand and the relative stability of the local currency, Consumer Confidence Index dipped due to the utility tariff adjustments and recent increases in export petroleum prices. Ghana's Purchasing Managers Index for August 2023, on the other hand, increased for the 6th successive month, pointing to a sustained improvement in business activity. The latest price reading in August 2023 indicated a fall in the headline inflation after consecutive upward trends in May 2023. Headline inflation dropped to 40.1% from 43% in July and 42.5% in June 2023, respectively. The observed decline in inflation was broad-based, with a stronger easing of food price pressures and the sustained easing of non-food price pressures observed in recent months. Food inflation declined sharply by 3.1% to 51.9% in August 2023, down from 55% in July 2023. Non-food inflation also declined further to 30.9% from 33.8% in the same comparative period. In line with developments in headline inflation, underlying inflation pressures also moderated in August. All the bank's core inflation measures trended downwards, with inflation excluding energy and utility prices decelerating to 41% in August 2023 from 44.2% in July 2023. Annual growth in broad money supply M2+, increased sharply to 40.8% in August 2023, relative to 23.4% in August 2022, driven by a significant expansion in both net domestic assets and net foreign assets of the banking sector. The growth in M2+ reflected both in domestic currency and foreign currency deposits. Growth in reserve money, however, moderated to 25.5% from 33.1% over the same comparative period, reflecting stronger liquidity management operations of the Bank of Ghana, which supported increased sterilization over the period. In August 2023, private sector credit in year-on-year terms increased moderately by 10.7% relative to 35.8% growth recorded in August 2022. In real terms, credit to the private sector contracted by 21% relative to a growth of 1.4% over the same comparative period, reflecting increased risk aversion of banks during the period. At the auctions for Government of Ghana securities, the 91-day and 182-day Treasury bill rates decreased marginally to 26.35% and 27.84% respectively in August, down from 27.68% and 29.12% in the same month of 2022. The rate on the 364-day instrument, however, increased to 30.8% from 28.9% over the same comparative period. All the rates were, however, negative in real terms, given the rate of inflation. The rate at which banks borrowed from each other, that is, the interbank weighted average rate, rose to 26.59% in August 2023 from 21.93% in August 2022, in line with the increases in the monetary policy rate. Consequently, average lending rates of banks increased to 31.78% in August 2023 from 27.96% recorded in August 2022. The banking sector remains stable as the industry's total assets increased to 244.7 billion Ghana cedis in August 2023 from 204.6 billion Ghana cedis in August 2022. The growth in banks' assets was funded by deposits, which grew sharply by 38.9% to 189.9 billion Ghana cedis from 136.7 billion Ghana cedis in the same comparative period. Total borrowings by banks, however, contracted by 41% to 13.9 billion Ghana cedis in August 2023 from 23.5 billion Ghana cedis a year earlier. Banks' profitability remained strong in the first 8 months of 2023. The industry recorded profit after tax of 5.7 billion Ghana cedis, representing a 41.4% annual growth, compared with 26.5% growth recorded last year. Specifically, net interest income increased sharply by 37.9% to 13.5 billion Ghana cedis, while net fees and commissions went up by 27.3% to 2.9 billion Ghana cedis. The key financial soundness indicators remain broadly stable. Profitability indicators improved with a return on equity at 36.9% in August 2023 from 23% in August 2022, while return on assets increased to 5.4% from 4.7% in the same comparative period. Also, liquidity indicators for the industry improved during the period under review. Capital adequacy ratios adjusted for the regulatory reliefs was 14.2% in August 2023, higher than the revised prudential minimum of 10%. The industry's non-performing loan ratio, however, increased to 20% in August 2023 from 14.3% in August 2022, attributable to elevated credit risks associated with the lagged effect of the macroeconomic crisis in 2022. International prices of Ghana's major export commodities recorded some gains in August 2023 after consistent declines in the previous months. Crude oil prices increased by 4% to $84.6 per barrel in August 2023 due to expectations of tight crude oil supplies following Saudi Arabia and Russia's decision to extend production cuts for the rest of the year. Cocoa prices recorded a year-to-date growth of 37.1% to $3,480.3 per ton in August 2023 on account of tight supplies in West Africa. Gold prices also gained 6.8% year-to-date to settle at $1,918.8 per fine ounce, largely due to expectations of a pause in the U.S. policy tightening cycle. In the first 8 months of the year, the trade account registered a surplus of $2 billion compared with $1.6 billion recorded in the same period of last year. This was largely due to import compression and a decline in exports. Total export earnings declined by 8.9% year-on-year to $10.8 billion, driven mainly by a significant drop in crude oil and cocoa products exports. In the review period, crude oil exports decreased by $1.5 billion due to an 18.8% fall in production volumes, as well as a 23.6% decline in prices. Exports of cocoa beans and products remained broadly unchanged at $1.6 billion compared with the same period in 2022, as the higher production volume of the beans balanced out the lower volumes of cocoa products. Gold exports increased to $4.7 billion on account of an 8.5% rise in the volumes exported and 1.9% increase in prices. Earnings from other exports, including non-traditional exports, decreased marginally by 1.6% to $2.1 billion. Total imports contracted by 14.7% to $8.8 billion from $10.3 billion a year earlier. This was attributed to a 13.1% contraction in non-oil imports to $6.1 billion, as well as a dip in oil and gas imports of 18.2% to $2.7 billion. On the external position, the balance of payments for the first 6 months of the year recorded some improvements. The current account recorded a surplus of $859.1 million from a deficit of $1.1 billion last year. The sharp improvement in the current account reflected a significant reduction in external debt service payments on the Eurobonds, bilateral, and some commercial loans, resulting in over $2 billion of savings in the year to September 2023 due to the external debt service standstill. For the same period in 2022, the current account recorded a deficit of $2.5 billion. At the end of August 2023, gross international reserves, excluding encumbered assets and petroleum funds, stood at $2.1 billion, equivalent to 1 month of import cover, compared with $1.5 billion, 0.6 months of import cover recorded at the end of December 2022. Gross reserves, broadly defined to include encumbered assets and petroleum funds at the end of August 2023, stood at $5.1 billion. The Ghana cedi has remained stable from the beginning of the year to date, except in January, when it depreciated sharply on account of the uncertainties at the end of 2022 associated with the launch of the DDEP. The Ghana cedi depreciated by 20.6% in January 2023 and has remained generally stable since then, with a cumulative depreciation of 2.5% between February and September 18th, 2023. The relative stability in the foreign exchange market reflected improved foreign exchange supply, including IMF flows, Bank of Ghana's domestic gold purchasing program, and the purchases of repatriated export proceeds from mining companies and oil and gas producers, which amounted to about $1.9 billion as at the end of August 2023. Furthermore, the bank's foreign exchange forward auctions for bulk oil distribution companies have helped remove the disorderly conduct in the market and contributed to exchange rate stability. Summary and outlook. In sum, the committee noted the moderation in global economic activity arising from high inflation, tighter financing conditions, weak demand weighing down on manufacturing output, as well as the moderation in China's recovery after the sharp rebound in the first quarter. The slowdown in global growth momentum is, however, concentrated in advanced economies, with the euro area being a key downside risk. But emerging market and developing economies are expected to post some strong growth at 4% in 2023. Global inflation is expected to remain above central bank targets for an extended period due to strong labor markets and pass-through of energy price shocks. The disinflation process is projected to take longer than expected, requiring moderately tighter policies, while growing uncertainty about the global growth outlook could trigger repricing of risky assets, sharp tightening of financing conditions, and further strengthening of the US dollar. These could transmit to the domestic economy through the trade and financial channels. On the domestic front, the committee observed the overall improving macroeconomic conditions, with relatively strong economic growth and a drop in inflation in August. These developments provide evidence that the policy mix under the 3-year IMF extended credit facility is beginning to yield results. Economic activity is rebounding strongly. The exchange rate is stabilizing. Inflation is declining, and the level of foreign exchange reserves has improved. Sustained improvement in these indicators should result in the restoration of real incomes and purchasing power. The strong growth outturn observed in the first half of 2023 is expected to continue in the third quarter, as indicated by the July 2023 update of the bank CIEA. Also, Ghana's PMI lent support to the growth outlook, reflecting improving business conditions. The results from the confidence survey so far also indicate continued improvement in business and consumer sentiments, influenced by the relative stability in the Ghana cedi, and more recently, the resumption of the disinflation process. The pickup in confidence is expected to continue for the rest of the year, in line with improving macroeconomic conditions. On the implementation of fiscal policy, while policies remain consistent with the IMF-supported program thus far, challenges associated with revenue mobilization persist and will require additional efforts to safeguard the revenue-led fiscal adjustment program. The country's external sector position has continued to improve significantly in the first 8 months of the year, supported by a current account surplus, reflecting higher gold export receipts, import compression, and lower outflows from the services and income accounts. The lower balance of payments deficit, the domestic gold purchase program, as well as inflows from the mining sector, and the liquidation of short-term external liabilities contributed to rebuilding the country's reserve buffers. In the last quarter of the year, reserve accumulation would be further bolstered by the expected inflows from the cocoa syndication loan, the second tranche of the IMF ECF facility, and other multilateral inflows. On inflation dynamics, the continued maintenance of a tight monetary policy stance and relative exchange rate stability have contributed significantly to the disinflation process observed in the year thus far. Headline inflation has declined by a cumulative 14% since the peak of 54.1% recorded in December 2022. Non-food inflation has also declined sharply by close to 20%, broadly reflecting the effectiveness of monetary policy. All core inflation measures monitored by the central bank are trending downwards, indicating continued easing of underlying inflation pressures. In addition, 1 year ahead survey-based inflation expectations seem well anchored. While the disinflation process has resumed, which should result in a gradual return towards the target band over the medium term, bearing unanticipated shocks, rising international crude oil prices, and adjustments to utility tariffs remain a risk to the outlook, which would have to be managed through monetary policy vigilance. Given these considerations, the committee decided to maintain the policy rate at 30%. The committee further indicated that while the expectation is for continued disinflation, it stands ready to respond appropriately should inflation deviate from these broad expectations.